Hello, I'm Michael Glass from michaelglass.com, where we make informed decisions about our financial future. This is our Forex Technical Analysis video update. Before we begin our video, we always like to start off our disclosures. Any symbols that you see today should not be inferred as a trader recommendation. No matter what form of investing you choose, stock, forex, futures, option, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our Forex Technical Analysis video update. In each of our videos, we will review the prior session's price action to come up with key support and resistance price levels. We'll look at the crude and gold charts to come up with leading sentiment. We'll come up with a low volatility watch list, an inside bar watch list, and we'll have an economic calendar update to see what could affect our future and open trades. And finally, if there's time, we'll have an education spotlight at the end. Let's pull up the charts. As always, we are starting off with the gold daily chart. And there is a couple things to notice. We did close above the 1660 price level. Still have to honor our downtrend line here. Still have to honor the 20 moving average here. So we made sort of a run up to it, testing our downtrend line here. But we did get a close above it. Now notice that we did before. And of course, you know, the big news of the day is France, Germany coming out in support of, you know, the banking system and doing what they need to support. So a lot of the markets rallied off of that. So it's interesting to see not only the markets rallied, but gold rallied off of that also. You think that if the rationale might be behind that, if we're printing more money, you're devaluing money, and so people are going into gold. That's one rationale. But I still would like to see it get above these wicks here, and those wicks are at 1675 to really say we're above this downtrend. I love to get above the 20 moving average. I love to get above these wicks to really say we're going to make a run now to the 50 moving average and to 1766, another 100-point run. We can see on our market profile that move we made, and it wasn't just a blast up move. I mean, there are some big candles in here, but we did accumulate volume on the way up there. So hopefully that means we'll support it. And even if we scroll over, we won't. You'll see that that's basically the move. We really accumulated volume even as we moved up and down, and so we really should have some volume support here. But again, we're also running into resistance on the daily chart. So as we go to our currency pair, starting off with the euro dollar, here the good news is we have already broken the 20 moving average. Little pullback here in our new trading session. The thing that's interesting about that is we could go in here and we can see these 1, 2, 3 wicks in here. And where did we pause today? Right at those 1, 2, 3 wicks. So that shouldn't be surprising to you. But if we can get above that 1.3690, get back up above 1.4, you know, 1.37, we can, you know, start to test the 50 moving average here. On a 1 hour time frame, we still have our support line we're watching. We are seeing that we ever so slightly got above our long-term moving average. We are in a sell zone. But the euro is in control. As long as the euro is in control, we will see price action continue to move higher. We can see the spike higher as the euro averaging higher, and then we spiked up here. And then the dollar continued to go sideways in a little spike down, but again, overall sideways. Sellers slightly in control. We'll see if the buyers can move this up with the euro being in control. The pound dollar, kind of seeing the same thing here from the standpoint of, you know, wick, and that's where we stopped today. As a matter of fact, on this one, the other one there was a lot of choppiness, but this one, let's put in this line here and kind of see how it's being honored. Maybe up just a little bit. There we go. And so we'll see what happens here. Still, as we said, over the weekend, and we were saying we're still in a channel. But what's good is that we have broken above the 20 moving average. On a 1 hour time frame, we can see that we did break a little bit this uptrend line that I was watching on the 1 hour time frame, pulling back a little bit. Now notice that where did we stop? Our long-term moving average came into play here. We're below that. We're also in the sell zone. Ever so slightly, the dollar took control as the pound really tanked there, which is interesting because as you look at it, you can kind of see we went sideways with a trending higher, while the dollar continued to move sideways. But I'm not sure what just happened there, where we had to see, maybe it is what it is. We hit our long-term moving average. We're in the sell zone. The dollar took control. Price action pulled back just a little bit. Sellers are in control. As we get a little extreme, we may be able to see something happen here at the 20 moving average to catch that run up to the 1.57 level. And again, we're going to need some volume as we move higher. And again, with Germany coming out, supporting the markets, all the markets rally accordingly. Finishing off with the dollar franc, what's interesting about this is the dollar franc really pulled back on this one. Well, with the support coming out in Europe, what are they going to say here in the States? Right now, we don't have anything scheduled. The earnings season starts tomorrow, being the Tuesday session, Tuesday after the close in the States. The earnings begin with Alcoa, so we might see something there. Seeing a little support here in the 20 moving average. Maybe we'll pull back all the way to the 200 moving average. We also have support at 8.89323. We have come out of our sell zone here. We're in the neutral zone right now. The franc has taken control. We got a little divergence here, which brought this big price action down. You can really see this spike up here. Sideways action on the franc, really trending down, sideways, and then we got a spike up. And the dollar really just going sideways. Here we can see the buyers are in control, so we'll have to see what happens. Will there be enough volume to get us down through the 20 and down to our support for a possible buying opportunity? As we come to today's watch list, we first have our low volatility watch list, which is our 1 hour time frame using Bollinger Bands, watching for a break of the bands. First up, we have the dollar Canadian. It is also a coincidence that it's going to be in our inside bar watch list, which is watching today's range as compared with Friday. We also have pretty much all of the dollar pairs. We've got the dollar Canadian, the dollar franc, the dollar yen, and then we also have the pound dollar. So continue on what we talked about yesterday about being able to manage ourselves. The other thing we had to understand as a part of that management is that we had to continue to evolve. We have to be lifelong learners, and so that we can adjust to the market conditions. As new investment vehicles come out, as the volatility changes, the liquidity changes, as mindset change, as the economy change, we have to evolve with that and adjust our trading setups so that we can be successful in each market conditions. And as they change, we change with it. As you know, you can find us on Facebook, YouTube, and Twitter. We have a page on Facebook, Are You Financially Literate? We have our free 5-video course on high probability trading. It kind of helps you frame it, let you know what are the components that you should have as a part of them. It should also give you an insight to who we are as coaches and how we can help you on a one-on-one basis develop a personalized trading plan, help you manage yourself, help you in that process of being a lifelong learner and evolving with the current market conditions, with your trading journal, with your documentation, with your back testing. If you're trading Forex, why not get paid to trade? It doesn't change your spread, your trading conditions. It's just rebates for your Forex trades. And finally, if you're looking for signals, we have that too. Again, focus on finding the provider that matches who you are as a trader, your risk tolerance, your goals. Get the signals so you can trade yourself or have them trade automatically. But in the end, it doesn't make a difference about your room, your indicator, or system if you're not adept to riding the roller coaster of the stock market and making those changes, putting on your brakes, accelerating the gas, being a lifelong learner, and making adjustments for each market conditions. Thanks, guys, and I'll see you next time.